Good morning, traders. Today is Friday, May 12th. My name is Charles, and this is the Pirate Traders live stream. All right. Well, real quick, just got to make an announcement before we start today. I probably picked the worst possible day to go live on the public stream here, as I just found out they're doing renovations to the apartment below me, and they are taking out a wall. So there's going to be a lot of banging today. As a result, I'm going to keep my microphone muted most of the time, and I'll really just try to draw on the screen and explain what's happening. But for now, let's just start off with my analysis at the beginning of the day, and you'll just have to live with a little banging in the background. Okay, so basically, I'm no longer looking at the market as being in a balance area. Those of you guys that have been following the channel for a while, you know we've been reading the market in terms of balance and excess, basically just trying to figure out, as it creates a little balance area, which way is it going to break? What is that going to lead to? What comes next? And the long and the short of it is we've just reached a place where it's an absolute mess, right? There's been so much balance in this area again and again and again that you really can't look at it. You can't zoom out and look at it on the daily and get any clue about what's happening. Instead, you have to really stay zoomed in and look at what's happening intraday. So bigger picture on the daily, the way I'm looking at it is I'm basically just looking at the large node of volume right here at the center of the range, which is at 41.65, and just looking at that large node of volume as sort of like a magnet. And price is trying to get away from it, but it keeps getting pulled back. It tries to get away, it keeps getting pulled back, tries to get away, pull back, get away, pull back, get away, pull back, again and again over the last few days. So that is my main focus, bigger picture this morning, is what happens in relation to this large node of volume right over here. Okay. Sorry, I said 65. I misspoke. 41.35 is the area right there. Okay. So that's that major node of volume that is acting as a magnet. So my first question this morning is, can we finally break away from that? Can we finally get some movement away, or are we going to get pulled right back to it once again? So the first order of business is the gap, right? The market, well, there you go. The market just opened with a gap up. So there's a gap between the opening here at 55 and yesterday's high at 46. So the first order of business for the market is to try to fill that gap. If they can, do they find support at yesterday's high or not? If they do not find support at yesterday's high, I assume we're heading back down to 35 once again. If we do, then I can get bullish for an attempt to break away. Also, if we fail to get to the gap fill, if we find support somewhere between where we currently are in yesterday's high, that would also be bullish to me as a gap and go. So just going to watch the gap and see where we find support and make a call from there. If you have not yet, please push that like button. I sure would appreciate it. All right, so we got a little mini bot shenanigan zone here, but right now it looks like a gap fill is what they're going to try to do. So again, we're asking ourselves, where do they find support? Somewhere inside the gap and then turn around and head back through the opening price? Or do they need to get down to yesterday's high, looking for support there? We got a bot shenanigan zone. Looks like we are looking at some gap and chop here. This has become the new normal for the market. It's important to note when we see that it's all, icebergs creating the support and resistance, that it is not necessarily probably real buyers stepping in, but rather an algorithm that is simply trying to get traders to go long here or short so that they can make a big move from there. So we're just going to let them chop it up here. We're going to let them have their shenanigans. We're not going to get bullish just yet. The highest probability remains an attempt to fill the gap. Good morning to Scott, Frank H., John G., Cortman, my Russian friend, Nap, ES Trade Monkey, Pavel, Waffles, Daniel, The Shaw, Tim G., Frito, TV, Cortman, Mike, Mac, Vins, Joe, Texas, ALS, ASL, dyslexic moment, Frank, Polar, Novice Trader, Jay, John G, Gino, $6 Million Man, Curly, and Percy. Welcome. If you have not yet, please smash that thumbs up button. It really does help out the channel when we're on the public stream. Even with the banging in the background, we want to bring in those new people. Let them know about that gap fill. Good morning, Min. Polar says, can I explain where the 3 support levels are coming from? Yes, sir. It's from the cumulative volume all the way on the left, the orange volume that you see, in combination with the overnight volume. So large nodes here and here. Okay. Also large nodes here and here. So that tells me that that was previously support or resistance. It remained support or resistance in the overnight, likely to act as support or resistance now. And then, of course, the bottom one is yesterday's high, which would be that gap fill. The Shaw says, yeah, we got to let them know about the gap and chop so they don't get destroyed in the first 15 minutes. I know. It'll be over whenever this iceberg right here at 53 is disappears. We got to go down there. We got to test that one. Whenever it's gone, then the chop is over and the market's ready to do something. Until then, it's a bot shenanigan zone. And would you look at that? It disappeared as soon as we got there. Sneaky, sneaky. Unfortunately, that sets us up for some chop. Okay, so now we're looking for halfback, which is also the opening price, to act as resistance. If we pass back through the opening price again, that would make this a gap and go. So it's too early to make that call, but we're getting close. Polar says, how many days do you use on the cumulative? Right now I have it at 190 days for the ES and like 200 days for the NQ. But I just, however much I need to be able to see data. If you just looked back even a few weeks, that would be enough right now because we've been in such a tight range. Okay, there you go. Bullish. That's a gap and go, folks. But Charles, what if it's just gap and chop and this is a giant game and they're going to pull it right back down on us? Well, we'll deal with that when that happens. Right now, we just pushed down, tried to fill the gap, couldn't do it. We made a good low with good taper and good excess. So this is a gap and go. The next target becomes the resistance at 41.59 and then the overnight high. All right, so taking a look at the NQ here. NQ obviously more bullish than the ES. ES is in the middle of balance area, while the NQ is breaking out of one. That breakout is confirmed again today because we have higher highs and higher lows on the NQ this morning. So that is bullish to see. They did not open with a gap, but they have brought in most of their volume above yesterday's high. So far that is bullish on the Q. It looks like they don't quite have the support yet, and they left behind a weak low. So next support is going to be around yesterday's closing price, 13,448. But all in all, bullish to see. Higher highs, higher lows. Value is higher. Break out of balance. Balance leads to excess. They could keep the party going. Let's see what they got. All right, so now we're looking for this area around the opening price and the halfback and the big node of volume, all at 55, to act as support for continuation higher. The idea is they tried to take the market lower, and they immediately found buyers. So now are there FOMO buyers? Are there people that regret not buying 53? Well, then they would buy the support right here at 55. ASL says I'm FOMO-sexual. So does that mean you just have sex with anything? As long as it's unexpected and instant? Based on impulse. There you go. All right, no support there. So I'm wrong on the gap and go. That means they're back to looking for support once again. At this point, because we did bring in those new buyers, I will remain bullish as long as we are above yesterday's high, assuming that there are buyers waiting there. I know that's always confusing when a market is liquidating and you're thinking, how can you be bullish while it goes down? I'm not bullish because of what's happening right now. I'm bullish because of what's waiting, which is stronger hands buyers. If we start to pull back down into yesterday's range, I will change my mind and get bearish. But for now, I think we're just looking for buyers. Okay, so as the 49 support breaks, obviously we're going to get that gap fill. The question becomes, will there be buyers waiting there? Liquidating right into a gap fill. There it is. John says seeking support in all the wrong places. Apparently not. To the tick. But of course, we know they're coming back for that. There's no way that they get support exactly to the tick on yesterday's high. Okay, so here's the thing about right now. Okay, normally, if you do this, if you open and you bring in new buyers, and then you liquidate and you fill the gap, and then you turn around and head right back up, that's a gap and go, baby. That's green lights. You should be bullish. But because they did it exactly to the tick on the high, and with that iceberg, I have a feeling that they're coming back down for this low once again. And so now that I'm seeing the opening price is acting as resistance, which it would not do in a gap and go, I am back to a neutral stance. Now I will get bullish once again if we pass back through the opening price. But this low right here, the fact that it was made with an iceberg and it was made exactly at yesterday's high, just means the buyers aren't really in control. So to prove they're really in control, they got to get through that opening price. Otherwise, gap and chop coming back for the low. Mike, when you say normally, you mean before 2022, right? I do. I mean like years ago. But I'm using that expression because when it comes to teaching this stuff, you have to teach it the old fashioned way and then just add the caveat that the shit doesn't work half the time anymore. So normally in a two-way auction process, when you have buyers above the previous day's range, you liquidate, you give those new buyers a chance to get in. That's bullish. The fact that you ran out of sellers right at yesterday's high is bullish. But now we live in the world of bots and computers where it's all a game. First, they got to chop you a million times and then they make their move. So I should probably just start referring to it as the new normal. Okay, floor traders didn't even use charts while trading. Imagine that. I know. To be able to just listen to the noise of the crowd and to be able to see the momentum shifting and to know you got to get into a position or get out of a position based purely on that. It sounds nice, doesn't it? Those days are gone. It's computers doing that now, and they do it in a fraction of a second. The yelling never stops. The Shaw says, have you ever thought of giving algo trading a try, Charles? I have. It's not for me. It's too complicated. I'm not good with tech stuff. You know what I mean? It's all about coding and then running back testing and evaluating based on back testing and all of that type. My edge is my instincts and my passion, right? When you're an algorithmic trader, you're basically just getting up every morning and looking at the results. You know, like, what did my bot do yesterday? You know, how can I make adjustments to it? That just doesn't sound like any fun to me. I like the thrill of trading, you know, trying to solve the puzzle in real time. But for what it's worth, if there's anyone out there listening to this who's new to trading, definitely consider getting into algo trading. It's definitely the future. And Forney says 30 seconds. I guess we got a news drop. News drop in 30, 20, 15, 10, 5, 4, 3, 2, 1. All right, so that's a good gap fill. So if this holds, we could trust it. If they pass back through the opening price now, it's definitely bullish. Mark, that's a good low. Not really. Yeah, you're right, actually. I just meant in terms of weakness. All right, so the news dump is bringing us back into yesterday's range. That is bearish to see, right? That means any momentum we had for gap and go is over. Bringing us back down into yesterday's range increases the odds. As I said earlier today, the question this morning was, can we break away from this big node? The gap and go meant we could. The failure means we're heading back to 41.35. and likely going to have a rotational day inside yesterday's range. We're likely just going to spend the day chopping, just grinding. No! It is what it is. So what could get me bullish now? Well, if we can get back up above yesterday's high, start bringing in some volume, start spending some time up there, get these ticks to turn around and get back above. Well, there you go. Turn around and get back above the zero line and stay up there. Well, then we could just consider this a liquidation that was based on the news and no big deal. But the more time and the more volume that we bring in inside yesterday's range, the more the odds we're just going to go sideways inside there today, because this magnet is just too strong and we can't get away yet. John says, no mo, gap and go. Oh, no. Is that what I sound like? Got 100 people hanging out, 63 likes. If you're looking to head down and test that support at 41.39, smash that thumbs up. It'll make it happen. Somebody just took away a like. Somebody undid a like. Must be a buyer. Sorry about that. Mark says, FinTwit had spoken. The market was only supposed to go up today. I should have went all in for down. Wait, how could they be? We were in the middle of a balance area. How could everyone be bullish? It would seem to me 50% of them should have been bearish. Okay, here's the test to the overnight low. Screwball says, I have observed that weak lows made with overnight lows are extremely weak ones. Well, there you go. You got a weak low right there at the overnight low. No mo FOMO. Mark says, I am wondering if the dealers who sell the options aren't pulling bids right now to tank the market as they buy the underlying of what is sold in options. Possible rebound for later then. I wouldn't think about it intraday like that, like a little bounce intraday. Think about it more like that magnet right here. Right? So why does this keep happening? Why do we keep getting stuck in these ranges? Again and again and again. Where the market like picks a level and then it's just like above, below, above, below, above, below, above, below, above. Oh, fuck. Finally, we're able to get away. Then it picks a new level, above, below, above, below, above, below. Finally, we're able to get away. Above, below, get away. Above, below, get away. It's like, it's a whole different game of balance and excess. And instead of being about the ranges, it's about whatever that magic number is. And that has to do with the options. So to answer your questions about what the market makers are doing, the fact that we didn't get the gap and go tells us that they want it to stay right in the middle. That's where they want it for the close today. Too many people bought calls that expire up there, and too many people bought puts that expire down there. And so they want it right in the middle. And it's a Friday, so I bet a lot of those options are closing today. So that means intraday today, we're probably just going to get chopped. They'll push it up a little. They'll pull it down a little. They'll take it all over the place to keep the market active. But generally speaking, we're stuck like glue to this 41.35 area until these options expire and the market participants buy their next set. Mark, would that be at cost basis then for the high volume nodes? Yeah, it just basically has to do with like the way the market makers do it is, you know, anyone can go in and buy all the options you want to buy, right? So let's say for whatever reason, it might be something happened in the news or whatever. For some reason today, a ton of people buy call options, right? Just lots and lots of people in all the big stocks and all across the market. They're just buying options and buying options, calls. Well, the more that they buy calls, right, the more that the market makers sell those assets because they don't want the price to go up. So the market makers are indifferent. They don't care. The speculators can buy or sell whatever they want, and the market makers, the math of their algorithms will automatically hedge the opposite direction. Okay, so moment of truth for the market. They dipped down into yesterday's range. They finally found some support. Can they get back above yesterday's high? Or does the market smack them right back down, making them spend more time inside yesterday's range? And does it smack those ticks right back down below the zero line, telling us we do not have buyers, we have sellers? All right, so that is bearish to see. Twice now they've tried to get the market up above yesterday's high, couldn't do it. This node right here at 45 is acting as resistance. We can also see that a majority of the volume, where it's red in here, is happening inside yesterday's range, and those ticks got smacked down at the 0 line. All of those things tell me that we do not have the buyers for continuation higher, and that we're likely coming back down to repair some of this weakness below. So I am now on a very, very short-term basis bearish. Let's see how far they can push it. Again, probably going to be a very neutral and choppy day, but just for the moment, I don't think we have the buyers to take the market higher. And if there's weak references in need of repair, those become the magnets to look for those buyers there. Mark says, why do they have to repair weakness? I understand that the auction wasn't finished, but so what? Didn't the participants get a chance to trade at that level? Why can't they forget that one? Okay, so first off, they don't have to be repaired. You definitely want to release that thought. They may come down here and repair this first one, and that's all they need. And these ones to get left behind. They may come down and repair this one, and that's all it needs, and this one gets left behind. So they don't have to get repaired. That's not the way I mean it. What I mean is the market is always looking for a place to do business. Okay? So if it's going down, it's looking for a place to find buyers. And if it's going up, it's looking for a place to find sellers. Okay? So the point that I'm trying to make is that if the market wanted to go above the area where it was yesterday, if it wanted to go higher than yesterday's range, it would find buyers up in there. We would have gotten a gap and go. We would have gotten to yesterday's high, and then new buyers would have stepped in. That didn't happen, okay? So there weren't buyers up here. So the market pulled back down. We liquidated. We gave a chance for buyers to step in at this node from yesterday. And then we were waiting to see, do they step in there? Well, once again, if my observation after that second move is that once again, they're spending all their time and bringing in all their volume inside yesterday's range, it tells me this was not good enough support. There weren't enough buyers here. So if there aren't enough buyers here, what do they have to do? They have to take the market lower looking for buyers. Now, I don't know where they're going to take it. I don't know where those buyers will be. Okay? I have no clue. But one insight that I do have is that this was weak. It was an unfinished auction. This was weak. It was an unfinished auction. So if I'm looking for a target, right, that's a great place to look. It doesn't mean that that will be the support that reverses. It doesn't mean anything. It just means if we don't have the buyers here, where's the next place we might have them? That last unfinished auction. But it is important not to think it has to get repaired, because it does not. We leave weakness behind all the time. I'm just always playing the momentum. Who's in control right now? Are there more buyers or sellers right now? If there are not buyers now, that's where they're waiting. Sounds like the wife needs the e-course. It's a birthday present. All right, so as we print the C period here, we've created what we call a poor low. That tells us the market is likely to get a little short-term support here, get a little bounce, pushing away from that poor low, but that it will then come back and repair it. Well, there you go, instantly repaired it. So that is the beginning of the momentum to the downside. The market is now one time framing lower, so you can assume that that momentum will continue to the downside until one of these 30-minute TPOs makes a higher high. So if the C period were to push above the B period high, or if later in the day we were to print the D period and it were to come above the C period high, until you see that happen, you can assume that they will keep pushing the market lower. Now, that being said, I don't think this is going to be a very dramatic day. I have a feeling it's going to be a very short, choppy day, probably very much inside yesterday's range. So sure, at the moment, we have the momentum to the downside, and we'll go ahead and ride it as long as it'll let us. But I have a feeling we're going to run out of steam, probably somewhere below yesterday's value, and then kind of just go sideways. So that's my prediction for now. Good luck, happy trading, and we will see you on Monday morning on the Bookmap channel. If you're not a member of the brigade and you found anything that I said today helpful, you should consider joining. It only costs $10 a month, and you can get these insights every single morning, just like this. Although in the future, there'll be less hammering in the background. All right, guys, thank you so very much. Those of you that are in the workshop, I will see you there. And the rest of you, I'll see you on Monday morning. Have a great weekend, everyone. Bye-bye.